What's up, guys? This is Carter Thomas with Coin Mastery TV. How you doing? Weekly update. You can see my voice is a little hoarse. I went to a fish show last night and yelled and screamed and sang along. It was great, but that's why my voice is a little lower than usual. If you're new here, hit the subscribe button. Sign up for the email newsletter list, coinmastery.com/invest. Thumbs up, the whole thing. Today, what we're talking about is obviously what's going on with Bitcoin. We're going to talk a little bit about historical Bitcoin levels and how it compares to these Bitcoin levels. And then I want to talk about a few other things, kind of starting with the micro, which in this case, starting with Bitcoin and price of Bitcoin, and then slowly moving into, okay, what's the bigger picture around the cryptocurrency space? And then what's the bigger picture in the global economy? And how does Bitcoin fit in? I think that may help be a good, perspective or whatever you want to call it. I don't know. And then finally, I did a poll a couple days ago, which I thought was really interesting, and it may not be for the same reasons that people may think. And I want to explain why, which I think you guys will find very interesting. So, big question on everyone's mind is, what's going on with Bitcoin right now? Well, there's a million different opinions, obviously. I don't know why this is on the 3 hour. It's kind of weird. Let's go to 4 hour. If you're listening on the podcast, I'm just looking at the 4 hour chart on Bitcoin. I'm actually looking at BitMEX just because I like the volume, but it's basically the same thing. And these lines are the same lines that I've had drawn for the last 2 weeks or so. The red lines below are just historical low levels. So the first one, I'm going to move my face out of the way here so you guys can see the prices, is at 54.60. That's going to vary by about $15 or $20 depending on what exchange you're on, and then 58.80 right around where the previous low is. That might be more closer to 5,800 for the most recent drop down low. Many people are calling that the full bottom. Some people are not. I have no idea. I'm not really interested in trying to predict that. What I am interested in is how these zones are starting to form. And we talked a bit about this last time. But for anybody who wants a refresher, one of the things that you're starting to realize, especially with Bitcoin, especially the nature of this market, and manipulation and the leverage and the ability to move markets and the international kind of 24-hour cycle of it, is that you'll notice that there's always these blocks where it either moves a ton very quickly or it's consolidating for an extended period of time. And what you learn is that it's really not worth trying to play this game very much, unless you're an experienced trader, unless you really want to learn about it. But it's really hard to make a lot of money and or keep your sanity while you're doing this. And so I think one thing I've definitely taken away from the last month or so is that it's a lot better to just take a position on, hey, is this bullish? Is this bearish? Or is this, I don't know, and plan accordingly and keep your trades down to one or two, and then kind of have breaking points of, well, if it goes below this, I know that it wasn't bullish. If it goes above this, I know that it wasn't bearish, and then reassess in a couple of days once the picture is clearer. And so that's why I like to draw these lines. Now, these lines are drawn mostly from historical levels. One thing that we looked at last time is this volume profile indicator. I'm going to move myself up here so you guys can see how this is in the visible range, right? So this is calculating all the volume from the range that you can see. So if we go, let's basically go from November to now. We are currently right smack in the middle of the highest volume historical at this level, meaning that this is where the most volume has been traded historically, this price, whether it be back in November, right around Thanksgiving, whether it be all the different times that we've gone up and down through this price, and then also right here. Now, there's a little bit of bias in that data because like volume in this market gets bigger and bigger, so there may be more weight on today's volume, but the fact remains that the way you read charts, or one of the ways you can read charts, is that you can look at this sort of thing. And so that's why this current blue line is what we're looking at. That is also why there's probably a good amount of resistance, and there has historically been a good amount of resistance and transition within this area. You'll also see above here is this other blue line, which is right around 98.75. Let's call that 9,900, maybe even a flat 10,000 for psychological reasons. But you can see that depending on how you draw this volume profile bar, that is where there's a big drop off in volume. Meaning once you get through there, it's what they consider kind of new territory. So if we could break through that, that becomes a very, very bullish area where there's probably not going to be a whole lot of immediate resistance. Not saying it's going to go parabolic or anything like that. I mean, anything can happen in these sort of markets, but that is why I drew the line there. So what am I doing about it? So I'm going to clean this up a little bit. I'm going to take this off. I'm going to move myself back down here a little bit. I'm going to keep it up there just so you guys can see better. So what am I doing about this? Well, first of all, I want to see if this price comes back down to this previous line, the 7,700 line, potentially even down to this 74, very, I guess, more aggressively down to 8,000, right where this previous bounce was. But I want to see what the direction of this current movement is. I want to see if this is a sustainable bull run, because this happened very, very quickly, or if this needs to consolidate in order to get moving. The other thing that I'm going to look at is I'm going to go out to the daily chart, and I'm going to start to look at the moving averages, right? And so an aggressive moving average to look at would be, the 10, the 20, and the 50. But I have another template for long term, which is what I really like to look at to determine if you're in a major bull run, which is when you get the 50, 100, 200 exponential moving averages. And when this starts to move up, that's when you can be very, very sure that the trend is moving in a specific direction. Medium term, like we just talked about. What I want to look for is when this price comes down and starts to bounce off of this moving average. That is when I would probably buy in. I would compare it to where it is on this chart. That would be like a much higher probability that, okay, I'm buying into a, technically speaking, a bull run that's getting some support from this momentum. I might not get the best price, but these prices always come down. Whenever you look at these historic bull runs, they get the big pumps. They retrace down to the lines, especially once they cross over. So you might miss 20% of the first part, but you can still ride it for as long as possible. So that's really what I'm waiting for. Just waiting this steep move. I'm waiting for it to pull back, get a more natural shape compared to these levels. So for anybody who is waiting or trading or anything like that, I think that the signs of this being a bull run are looking pretty good. But for confirmation reasons, you want to wait for it to come back. It always comes back. Remember that? I mean, it's like, so it's nothing else. That's one thing we've learned in the past year. It always comes back, and having guidelines of where you buy in, especially if you're looking to go long. And if it breaks through there, then you sell it and you wait for it to reset and start again. But that's what I'm doing. None of this is professional advice, as always. But that's what we're looking at. Now, what's causing this, right? Like the next big question is, what's the big deal? I'm not going to spend too much time on like other parts of the market. Other thing, which I posted yesterday on Twitter, is the last time that we were on, we had this kind of price movement, or we were at this price was November. It was like Thanksgiving, November 24th or something like that last year. And I posed the question, what was different? And there's a lot. You can go on Twitter, Carter Thomas on Twitter, go check it out, and you can see some of the responses. I think it's pretty interesting just to think about that. And another thing you could do is always go back and watch some of the videos from November and take a look and what we were talking about and all that sort of thing. But let's look at some of the other things that people are talking about. One is the ETF, right? So the CBOE, and there's a lot of ETFs that are being proposed to the SEC right now. That's getting a lot of discussion. That's potentially bringing a lot of bullish sentiment, which I think is true, but that just feeds into this whole idea that, what's a reason people have to buy a speculative asset? And an ETF is as good a reason as any. And there's fundamental reasons too. I mean, if it's buying up Bitcoin through that's a big one. My personal opinion, on top of the ETF, is that I think that this is a very, very big deal. This is a tweet by Brian Armstrong, who is the CEO and one of the founders of Coinbase. And Coinbase just got whitelisted back on Facebook, meaning they can do cryptocurrency ads on Facebook, whereas I think, was it January or so, Facebook originally had banned all cryptocurrency advertising. And so they got whitelisted, meaning they can advertise to retail people to come in, buy $100 worth of Bitcoin or whatever coins they want. Eventually that's going to lead into buying the Coinbase index once they make that non-accredited investors. So this is a big deal. The other piece of this that's really interesting is if you watch Google, or maybe don't watch it, but like Google had their earnings report. I think Facebook's earnings reports are either today or tomorrow. But Google, their advertising business is absolutely through the roof. So they're making huge amounts of money. They're having huge volume on their advertising side. Facebook, I'm sure, is going to have the same numbers. This is still a massively viable and effective use of marketing dollars that has never been used before or been available to get retail signups. Has been relying on word of mouth and referral programs, like all the links you see on sign up for Coinbase using my link or whatever it may be. So I think this is actually a very, very big deal. And I don't even think they've rolled it out very hard. I mean, you can see in the screenshot, it's demo because it's like they took a screenshot out of the ads manager, I'm sure. They don't even have retargeting pixels on their website yet. That's more of like, if you know marketing, there's a lot of things that they're not doing that you would do if you're really starting to ramp up your marketing. So this has not even really been rolled out in a big way yet. And I've always said the way you go to the big moon is not through huge sovereign banks coming in and trying to buy into Bitcoin. You want 25 million people to come in and buy 0.1 Bitcoin or Litecoin or Ethereum or whatever, any of the assets. You want huge amounts of people to own a little bit because that's what makes a real market. That's historically what's always driven it. ETFs, index funds, and this sort of thing is an extremely big deal. So if you've ever watched, or I don't know, maybe you've noticed, I've talked about this a few times on my Twitter profile. The pinned post, this is what it talks about, right? We've talked about how people are going to buy all this. The big companies, they're really interested in the infrastructure. There's a great interview of what's the guy's name? The digital currency group guy, Barry Silbert, and where he talks about the biggest investments they're making are in the on-ramps into crypto space, right? The exchanges, the wallets, things like that. And that's what's happening right now. And once they get an invested stake in the equity in those companies, then they can start to market it. So Coinbase is kind of leading. They're probably maybe 6 months or a year ahead of what the rest of the world is going to do. And you can see that they're following this playbook very, very clearly. Step 4 being market to retail investors who buy on exchanges. So that's a big deal. Keep that in mind. Keep your eye out for advertisements on Facebook, on Google, YouTube, wherever you see advertisements. Not necessarily for people selling like courses and how you're gonna make $1 million or whatever, but for people, exchanges trying to get you to come and sign up on the exchange and to buy something. So I think that a lot of that is driving from a fundamental standpoint. I think from a technical standpoint, there's a lot of pent up demand. People who are just ready to start buying in. The volume on the CME is growing, which is the futures market, which is actually starting to, it's a couple $100 million a day in cash settled futures, but that's something. So there's a lot. Like there's technical reasons, there's fundamental reasons. And then the macro things, reasons that are out there is that we're starting to see a lot of, not confusion, but like there's not a lot of places for money to go, right? And so one thing I look at a lot is the dollar, right? I think that the US dollar and knowing what's going on in the US dollar is really, really helpful to understand what's going on in the global economy, because the US dollar really pegs itself to not only currencies, but to oil, to the stock market to a certain extent. And when you back it out, the stock market, which really is a barometer of the economy, at least in the United States, but really globally, is a byproduct of corporate earnings, which have not showing any signs of slowing down, and interest rates, which directly affects the dollar. And the way that the Federal Reserve and Trump and they're kind of clashing about this, because the Federal Reserve wants to raise interest rates, which will make the dollar stronger. That traditionally hurts the economy. It lowers the stocks, corporate earnings go down. There's buybacks, debt. There's all these things. It's all coming to a head right now. And what's happening is when this all comes to a head, asset managers, hedge funds, everybody is starting to. You could see this in the portfolio analysis. See this all day. All these charts like capital outflows, the COT analysis, all that. Where's the money going to go? It's got to go somewhere. And obviously, crypto and Bitcoin, it cannot handle a fraction of a percentage of the amount of money that we're talking about here. But it is starting to get like a legit second look from people because of things like the futures market, because of these custodial services, because of this investment index opportunities. It's starting to be able to look like not an attractive or even a bullish asset. It's just like, at least we have another option of a place to park money, or at least a place to speculate to drive yield when the rest of our portfolio is whether maybe uncertain, or it's just like we don't know what to do, right? Because there's all these things, whether it be bonds or be bond yields, like the inversion of the yield curve, the stock market. There's a lot of uncertainty, and this I think is starting to become a real thing with Bitcoin. So keep your eyes open for that. I think that's super important. Where this is the first time I've ever really started to see Bitcoin and cryptocurrency get a real look from people in the macro institutional space. I don't think it's like part of a portfolio structure yet, but we are starting to get that pain, that pressure that we talked about last time from the other side. I think the stock market is going to have a really rough week in the next couple of weeks for a variety, just because there's so much pent up pressure. And then we'll see like how that plays out. Like obviously big money, institutional money, it takes a while for any sort of movement to happen when you're talking about like even $10 million. I mean, that's not very much money in that world, but you may start to see a serious movement over. Will it translate to price? I don't know. It may just go straight into pre-sales of some of these ICOs or some of these companies. They may just try to get equity in the companies as opposed to working on the utility tokens or the security tokens or whatever. But keep an eye on that. This is a big deal, and you're starting to see the pressure, like it's almost like you can see it just building up. One post that I thought was really good, Jesse Felder. If you guys don't know who Jesse Felder is, he's got a great blog called thefelderreport.com. I'll link this in the show notes. Go check it out. He always has really interesting things. And if you're interested in this kind of historical stuff, which I think a lot of people are, based on trying to predict Bitcoin, versus things like gold or the internet bubble, like kind of map it against previous trends. He looked at what Ray Dalio talks about with the analog to the 1937 kind of market, right? That started in the 20s and led into the 30s, and how he compares it to our current decade. Now, the idea of an analog, is I don't know if it was originally started by Paul Tudor Jones, but if you watch the documentary called The Trader about Paul Tudor Jones, it's amazing. And he did this for the 1987 crash, where he looked back and kind of predicted the 1929, 1930 crash and depression, and he mapped it to the 1987 stock market. Dalio kind of did the same thing, but on a broader deleveraging cycle, which is what this is in, because it's just like how much corporate debt is being used for buybacks. Like it's got to get deleveraged with interest rates. And so he's starting to map this stuff out, which I think is really interesting. And as this happens, like we talked about, the money's got to go somewhere. Where's it going to go? It can't go in, you're not going to put more and more money into a losing stock market. If bonds are going down, we're going to put it into T-bills maybe. Okay, but emerging markets, commodities, the gold, but gold's going down. Crypto starts to look really interesting. So starting to look at this, reading articles like this at least once a week, I think is just very helpful. This is the kind of stuff that I love. I'm super interested in, as you guys know. Now, the last thing I wanted to mention was this poll I put out, which says which would you rather invest in? Which is grammatically, that's not a very good. I know that could be written better. The first is asset A has a 95% chance of returning 2%. Asset B has a 75% chance of returning 7%. Now, I know that it's not a very good question because, and you guys pointed this out, well, what's the other alternative, right? If it's not 95% chance, or what's the 5% chance of am I going to lose 10x, or am I going to lose all my money? I would kind of think about this like stocks and bonds. Right, the average of a stock over 5 years is going to be 7%, give or take. Average of a bond will be 2%. That's historical numbers. And the reason why I wanted to do a poll on this is because one thing that I've learned a lot about is how when you have big money, when you talk to guys who are running hedge funds or big trading companies, big macro funds, is that the conviction rate is infinitely more important than the short-term return. Meaning, a sure thing that gets 2% is often much more attractive to someone in a hedge fund than a pretty good bet that could produce 3.5 times the return in the apples to apples. And the reason why is because of leverage. And so what I mean by that, and this kind of dawned on me when I was reading that book called The Perfect Trade by Alex Gurovich. And so you can go to coinmastery.com/store. You can check this book out. He writes a lot about this because he runs a hedge fund that makes a lot of money on bonds and trading swaps, which are kind of interest rates. Those are very, very small margins, very, very small returns, relatively speaking. Like I would look at a bond and I would say, why would you ever buy bonds? It's going to go up 2%, 1.5%. I mean, it's not a good investment. I mean, I should say in the last 10 years, bonds have actually did well in like early part of the century or, 2000s and everything else. But overall, it doesn't even compare to stocks when I look at thinking about it like a retail stock investor. But when you read that book and when you talk to some of these guys, they think about it as like, well, if I put 20x leverage on my money, that 2% now becomes a 40% return on the initial equity of the money. Now, this assumes you're not borrowing money, or at least the money you're borrowing, the interest rate doesn't eat in that big to the returns. But even if you're borrowing at like 3%, you're still making huge returns on the leveraged money. You see what I'm saying? And so the math can get a little wonky on that. But I think that this type of thinking is something that a lot of people miss when they're looking at how this big money comes into something like Bitcoin, even with an ETF or an index fund or whatever. Conviction rate at a lower percentage is often much more attractive than a much higher ROI at a lower conviction rate, right? It's not just about the probability of making money is better on the second, right? Like probability theory would tell you asset B all day, every day. But when you have the when you have the ability to leverage large amounts of money, when you have the ability to move large amounts of money, you can turn your money into big returns with a higher conviction rate, but it's higher risk, right? Especially when you're using that kind of leverage. But you get that deep pools of liquidity and all that sort of thing. So, if that's confusing, I would encourage you to look into, first of all, leverage trading is risky. I'm not recommending anyone do that, especially if you're just getting started and you don't have a big pool of money to work with. But as you get into the next level of investing, of like kind of institutional level investing, that is a huge part of how you construct your portfolio and return yields. That's one thing I think other thing I've learned is that it's not the hedge fund, like, the whole thing about index funds beat hedge funds and all that. That's actually not true at all. The difference, though, is that hedge funds have way bigger costs, right? Because they're buying and selling stuff all the time, all the time. But they're absorbing huge tax implications here and there. So they may get a 40% return, but they're getting smoked on fees and commissions and carries and taxes and all that. Whereas the way ETFs and index funds are, constructed, it's a much lower cost. And so you can save 15-20% on that. And so the overall return of an index fund. So for the average person in index funds, 99% of the time is going to be a better bet. But from a gross raw standpoint, the hedge fund can actually win more often than not, especially as we get into a more tumultuous time like this. So I just want to bring this up because I think it's an interesting concept. It's the kind of thing that thinking like you have $100 million is how you're going to be able to predict the next big moves in Bitcoin, right? Yes, I think having 50 million new Coinbase customers is an enormous piece of the puzzle, probably the biggest piece of the puzzle from a price standpoint. But when we talk about the market, the institution of it, you need to think about how do people with 100, 200, 300 million dollars, how do they think about money? How do they think about investing, portfolios? Not just about portfolio construction, but like actual execution of the trades. How do they move money? How do they turn money into large amounts of money? Or how do they sustain great returns over a long period of time? And it's a lot more complex than some may think, than picking the right stock or the right bond or whatever and moving things around accordingly. So that's something I'm learning. If you ever want to learn about that, check out Real Vision. This is not a sponsored thing. I'm not getting promoted at all to pay. I legit really enjoy the service. Realvision.com. Go check them out. They have a YouTube channel too. It's all free. The paid one is like $200 a year. If you're interested in how this stuff works, I think you'll find that it's a very I don't know what do you call it, like informational and helpful service. Okay, so I'll link all this stuff up, but I figured just do a weekly video. I'm going to be on the road for the next however long, but I will try to get out there and get back to you guys. I'll be on Twitter, but yeah, I just hope you guys have a great day. Rock and roll. Last night I went to a great fish show. It was awesome. Great carini for anybody who listens to fish. Great times. All right, guys, have a great day. I will talk to you soon. Peace out.